You've called silver the new small cap,
Ah,
right? And what is your outlook for silver in 2026 and years to go?
my silver small cap has become a little bit of headline.
Speaking of working professionals or even entrepreneurs, should they dabble into direct stock investing? What's exactly your view on that?
I think there are different strokes for different folks.
Within retail, how much number of years should they be looking at in terms of investment horizon and other factors?
So, great question. It's an equity fund, so I think nobody should have a horizon of less than.
Hi Radhika, it's a pleasure having you. Really excited for this conversation.
Thank you for having me, Kanan.
So, to begin with my first question, you've just launched the Greater China Equity Fund via the Gift City. What exactly is the rationale behind launching this fund?
So, look, the rationale is I think we have always been a proponent of international diversification, that no matter how good the India story is, a sensible asset allocation has multiple asset classes, including international equity. And we've been talking about this in good times for international markets and in less good times. And our international products, which have been around, they're some of the oldest international products in the industry, have also been very popular. Two of the most popular funds we run are US Tech and Greater China. Now, unfortunately, the RBI limits for offshore investment are closed, for our domestic funds, so we are not able to offer them beyond a 5,000 rupee sort of retail subscription, and we've seen demand for them. So the idea was to offer these international offerings to our customers via gift. Gift seemed like a very logical destination where people can use the LRS route to get dollar exposure. So we've started with the Greater China Fund. We've always been of the belief that if there are two places you need international exposure, it is US and China. China is the second largest economy in the world. We partner with JP Morgan, which has very deep research capabilities in this, and a team sitting out of China. And the fund is a retail fund, so it's available at $5,000. So that's the logic, to give this international exposure that was so popular in our India business from GIFT.
So, are you going to launch other international funds as well, which may be investing in the US or other economies?
Yes, we certainly will. We started with China. As I said, the valuations looked compelling there. It's an extension of the business that we already have, but we will have multiple products out of GIFT, both for outbound investors and for foreign NRI investors looking at India.
Whom exactly is this fund for? Like within retail, how much number of years should they be looking at in terms of investment horizon and other factors?
So, great question. It's an equity fund, so I think nobody should have a horizon of less than 5 years for any kind of equity investing, whether it's India or China. How much and what investor? I would again go back to the point of asset allocation. I always think that international investing is not for first time investors. For first time investors, I always recommend hybrid funds, multi asset funds, domestic funds first. But if you've done that and completed your basic India asset allocation, then you can look at international exposure to the tune of 10-15% as part of your global allocation, and I think China would be part of that.
Got it. You've called silver the new small cap, right? It has crossed $80. And what exactly is propelling the demand, and what is your outlook for silver in 2026 and years to go?
Okay, so my silver small cap has become a little bit of headline. It was a statement said in jest, because just like the craze for small cap funds, people are buying silver. But we have always maintained, well before the silver rally started, and I'll tell you a little story, that gold and silver are an important part of people's asset allocation. In fact, before we launched a gold fund, we launched something 3 years ago called the Gold and Silver FOF, which was the industry's first fund to invest 50% in gold and 50% in silver. We did this actually before launching a gold ETF, a silver ETF, a gold fund of fund, or a silver fund of fund. This was our first precious metals product. And our logic was simple, that if you look at the portfolio, gold is like large cap of precious metals, it's a stabilizer. But silver actually is a less understood element. It's like the mid cap. And it has industrial use that is now beginning to be discovered. And finally, commodities, you can't mine more of silver, right? It's a byproduct. So, silver is finally benefiting from a supply and demand game. Supply is limited, industrial use is now being expanded in multiple different facets and multiple different industries. So, that I think is contributing to the rally of silver and also central bank interest in the category. We always maintain that silver is a volatile precious metal. So, you should think of it as volatile, and ideally if you want precious metals exposure coming to asset allocation, gold plus silver gives you like the large and mid cap combination.
So it has typically remained range bound until 2025,
Yes.
right? And do you see a breakout happening in the silver prices now, being sustained for a longer future now?
So I don't think anyone can forecast. I don't think anyone could have forecasted that the breakout that happened in 2025 was going to happen. I'm telling you again, when we launched this fund 3 years ago, the past returns of both gold and silver looked so terrible that people said, why would you even do this? I mean, we didn't collect 20 crores in the NFO, and now we collect more than that amount daily. So I don't think one can forecast. I think one's approach should be to look at asset allocation, but not to go overboard on silver, because remember, it's a metal that also corrects 10-15% in a single day or single month. The structural supply demand dynamics are still in favor of silver, but I repeat, it's going to be a volatile asset class.
And what is your outlook for metals like gold and other metals for 2026?
So I think gold again benefits from the same structural argument, but here this is driven by central bank buying. I think we lived in an era where the dollar was your reserve currency. The US was sort of the center of the world. And we think as you look to 5 years from now, 10 years from now, you might be living in a world order which is a lot more multipolar. It doesn't mean that people are abandoning the US, but people are, as economies, becoming a lot more insular. People are looking to multiple economies beyond the US, and gold's role as sort of the reserve for central banks is coming into play. So, while people have spoken a lot about retail demand, I think central bank demand is a big driver of gold. If we are going to live in more inflationary times and tariff driven times, then all sort of hard assets, including precious metals, are likely to do well. And of course, thirdly, gold forms a part of asset allocation. So, precious metals is a part of asset allocation, but fundamentally in the times we live in, there is a case for real assets.
Got it. You've spoken about the 65, 10, 10, 15 mix. Can you please explain what is that for our audience?
So, I spoke about it in the context of a fund that we have, and I've always been a big believer of boring thalis. I think thalis are a construct that has worked very well pan-India, even though they differ from state to state. But the idea was really that if you look at a boring asset allocation, and this is our multi-asset fund of fund, 65% domestic equity, 10% gold, 10% silver, 15% debt. Actually, it's a very, very nice static asset allocation portfolio. Now, one can do all the cleverness of timing up and down, but we believe that the boring, simple and safe works. You get 65% equity exposure. In years that equity doesn't do well or has extreme drawdowns, gold and silver and real assets are there as the joker in the pack to give you that protection. And I think for a consumer looking for a dumb asset allocator, this asset allocation works really well.
Radhika, you must see that assets like small cap stocks or mid cap stocks are trading at very high multiples. I think even if you consider the consolidated PEs that have come in after 2021, they're still trading at their all-time high PEs, right? Is it suitable? Do you see this space still attractive for a long-term investor?
So I want to give you a slightly contra answer here, because I think it's become fashionable to bash mid and small cap as a segment. Firstly, I think if you look at the rolling 10-year PE of India, it has re-rated upwards. Okay, so let me say that nothing is particularly cheap, and 20, 25, 30 times multiples are not going to be sustained for long if you don't have growth. But what we do believe is that after a lot of turmoil in 2025, we might be at the pickup of an earnings growth cycle, given all the steps that were taken in 2025 to revitalize consumption in terms of tax changes, GST, etc. We might be at the beginning of an earnings growth cycle. If that is true, then some of this will iron itself out. Now let's come to mid cap as a segment. There is a belief that mid cap means small companies, guys who are fifth or sixth in their segment, unproven business models. India is a strange country. We are the only one perhaps that has a rank based definition of what is mid cap, which means 101 to 250. If you look at most of the big themes of the future, hospitals, capital goods, capital markets, the leaders are present in the mid cap space. If you look at the segment that has delivered the best outcomes in terms of earnings growth, it is the mid cap segment. And if you were to look at purely investing in large cap, that's essentially a portfolio of IT, energy and metals. So if you actually want to build a portfolio of India of the future, you can't be absent from mid cap as a category. Small cap, you can add in smaller parts to the portfolio, but I also do believe you get very high quality companies in the small cap segment. But large cap is actually mega cap, and mid cap has now become closer to large cap today.
Got it.
I mean, the largest mid cap is close to 1.2 lakh crore. It's not a small company.
Right. Speaking of working professionals or even entrepreneurs, should they dabble into direct stock investing? What's exactly your view on that?
Look, I am, full disclaimer, I am a mutual fund CEO. So before anyone trolls me for saying I'm paid to say mutual fund sahiye, let me say that. But my take is that investing takes a lot of time. And if you have the time to sit and research 50, 100, 300 companies, by all means, please do it. For the rest of us, there is something called mutual fund. I am also a working professional. And the one thing I lack is a lot of time. And so I choose funds for my investments. In fact, I've never held a direct stock in my life in the listed space, just because I've never had the time to sit and research it. So, I think there are different strokes for different folks, but I do think direct stock picking, especially when you have a listed universe that's expanding of 100, 800, 900,000 companies, takes a lot of time, including in the mid and small cap space. So if you have the time, please do it. But I think working professionals are constantly short of time. I hear comments on work-life balance and juggling family and kids and X, Y, and Z. For the rest of us, there is mutual funds again.
So what asset allocation mix would you recommend for someone who is a 30-year-old or a 35-year-old who's looking at retiring at, say, at an age of 50, 55?
Okay, so I always get a little hesitant to recommend asset allocation mixes based on age, because I think people have such different circumstances. And there are 30-year-olds who are very risk averse because they have home loans and family liabilities, and there are 30-year-olds who have fully paid up homes and can be 90% equity. In general, I do think that you need to be at least 50 to 60% equity if you can afford it at that stage. And then the balance can be a combination of real assets like gold and silver. If you're a little more evolved, you can have international and of course you should have some amount of fixed income and cash. But I think 50-60% equity is a good place to be. And I think as a money principle, if you're in your 30s, try and I have this in my book, trying and saving more than 50% of your post-tax income is something you should try and do.
And what is, according to you, the best way to have exposure to these real assets?
So real assets, if you want to do gold and silver, I think gold funds, gold ETFs, fund of funds, blended funds are the way to do it. The other way that you can pick up is multi-asset fund of funds or multi-asset funds. They give you blended exposure. So both are ways. Either you can buy the individual components outright through funds, or you can buy the combined fund.
Thank you so much, Radhika, for having this conversation.
Thank you.
I'm sure our audience will draw a lot of insights from this conversation.
Thank you. Thank you, Kunal.